What's good, gang? It's TBT, aka the Brainless Trader, and we're back with another video. I'm outside in nature today, and I want to tell you about the simplest ICT concept to get for beginners. This is the one that stuck with me. It's the model that he taught first in his private mentorship, and I'm going to talk to you and show you why I feel like it's the one that you should be focused on if you're starting out. Now, this is just my opinion, but hey, let's hop into it.
When you look at ICT's market maker model, right, you typically started off with the breaker, which is that market structure shift, right? Obviously, looking at the higher time frames, you know, we had that run on liquidity here, and then the formation of the breaker is the beginning of that market structure shift, right? But then you want to then see, okay, what's going to happen as price runs past that breaker? Does it retest the breaker? Yes, it retests the breaker. Okay, cool. Now this would be our first area, our first leg of distribution, right? Then you would be looking for essentially first leg and then a second leg of distribution, right? Which these both come into an area that could be considered the second leg of distribution. And I think that the second leg is where my trades took place. You got your first leg of distribution that comes right off of the breaker. Then you have a large fair value gap that forms, and within that fair value gap, this is your consequential encroachment, the midpoint of that fair value gap, right? And essentially, I'm looking at where price basically runs off liquidity here, right? Price runs liquidity, and then that kind of enters me into my model, which is identifying those breakers after a run on liquidity, and then using price, you know, retesting into those breakers to get me into trades, right? So boom, here goes another nice breaker, and when you find that run on liquidity, right, to the opposite side. So after this run on liquidity, right, I want to identify my areas of sell side liquidity that could become, you know, areas that I could take a partial at, and then my ultimate target, you know, is way down here at those higher time frame lows that I showed earlier. But essentially you got the same thing: high, low, higher, high, lowest down close candle. Let's zoom in. Lowest down close candle. Now we have 4 consecutive candles, so I'm using the high to the low of those 3 consecutive candles, which the third one comes below this last one, so I'm using all of it, right? This is my entire breaker zone. Now, where's that fair value gap that forms across the breaker? There's a couple of fair value gaps here, one here, right? But if we look on the 15, maybe that area would be a little bit larger. Okay, boom. So you have your true fair value gap, this one right here, that you really want to be looking at. It's the largest one. It's the one that, you know, essentially is the one that's directly across from our zone, which you could also say, oh, this is one too, but, you know, I'm going with the one that is most likely aligned with the order block here, which would be the highest up close candle, which likely is, if we just use the highest up close candle, you could use this one, right? This is the order block. So when these things form, you're always going to have, you usually should have all of it. You should have an order block, you should have a breaker, you should have fair value gap, right? So this order block aligns with having this fair value gap just barely below it. It's across from it in a way. Then you got the breaker here. So it's never going to look the same, but you're just trying to see, you know, if you can identify the area, okay, what does price do? If price reacts off of it, then you know you got something good, right? Obviously, if price doesn't react off of this area, then you're going to say, I'm not taking this trade, right? But as you see, price comes up, doesn't go across mean threshold of the order block. Now you got price running back, essentially, into or across the breaker, which now you could say, okay, well, price closed above your breaker. Wouldn't you say your trade is invalidated? Well, you got to see what price does after this, right? So if we go back down to the 5, let's see what exactly happened. Price barely closes above the breaker, but since you have this nice order block up here, which I just showed you on the 15-minute, then you've got the breaker zone that price essentially just barely closes above. But now you got to remember, okay, where was the fair value gap zone that I was looking at? Fair value gap zone was on the 15-minute, and if we were to look at this in its entirety, I don't believe price closes above the midpoint. We got to see. So you got to use all of these to your advantage to see, you know, if you're really painting the proper picture to get into a trade. So using my fib, I can go across that entire zone and identify my midpoint of that fair value gap, which is that 50% area. Okay, so you got something. If you're trading this live, right, at the time, you're like, well, price just barely closed above the midpoint, but it doesn't close above the entire fair value gap zone. So as long as you can get some nice volume back down to the bottom of this zone, right, then you can say, give yourself a reason to get into a few trades. Now, as you see, my executions on my chart are spread across that area, right? So I saw price trade past the breaker here. I took this trade thinking, okay, we're getting ready to run past the breaker. Then you see price trade back up into the breaker and the fair value gap and run off. So I'm like, okay, yeah, we really in. And then I think I had my stop set here, and I got ran out by this runoff of this area of liquidity right here, right? So that's what happens in GU and GJ a lot, is you're gonna get that manipulation before you can get that true runoff. But as you see, price doesn't run past that fair value gap, doesn't run past the order block, runs back across that breaker that we had, and now you have reason to believe that there could be some sell side action. Not to mention that you get another breaker that forms here, high, low, higher high, lowest down closed candles, these three from high to low. Boom, you got another breaker and you got a fair value gap across from it, which then is where I entered another trade here, seeing that price was getting ready to go down and respecting this area, which I believe this is on the 3 minute, and here it is, 3 minute fair value gap. Price doesn't close above it. So you see, I'm literally just looking for breakers in the market, and when price starts to unfold like this, right, when you see the respect of the fair value gaps, you see the respect of the breakers, price really running off, then you have your low resistance liquidity type setups, right? Now this is not the lowest resistance liquidity, right? It's still choppy a little bit, but you can easily identify these nice areas to enter these trades. And you know, you got to look at low-hanging fruit. Obviously I had my targets here, but I took my profits here just seeing that it was getting ready to be about 12 o'clock, and I didn't think nothing else was going to happen.